Studio, we welcome now Gordon Fellows, president of the Mississippi Bankers Association. Hey, Gordon.
Good morning, Gerard. Thanks for having me.
You bet. Thanks for coming on. So we were just talking earlier about this government, especially the Biden administration, that seems to want to insert itself into almost all aspects of business and industry, and perhaps top of the list, maybe next to healthcare, is the financial industry, the banking industry. We've seen a barrage of new regulations handed down, limitations on overdraft fees, credit card delinquent fees, right, charges. I saw this morning now they want to, the Biden administration wants to incorporate the buy now, pay later companies under the rules applying to standard credit card companies. It just can't leave anything alone, I should say. How are your members dealing with this? And I know you're familiar with a whole lot more than just that short list. Is this real? I mean, are they having to grapple with this on like a daily basis?
Yeah, absolutely. So in the last 12 months, there have been about 7,000 pages of new federal bank regulations, either proposed or finalized. And all that doesn't include the buy now, pay later stuff you were just talking about, right? So 7,000 pages in less than 12 months is way too much for small community banks like those that are based here in Mississippi to digest effectively. And there's costs associated with all of those. So one of the things that I think is really interesting and has been really sort of complicated is, with all this sort of regulatory barrage of new regulations coming. We call it a tsunami of new regulations. The industry has sort of stood up and started suing the regulators for overreach. And that's a really uncomfortable position for the industry to be in. We're not. The Mississippi Bankers Association isn't one of the plaintiffs, but there are several trade associations in Texas and in D.C. and other states, Minnesota and others that have sued regulators over different topics. And a lot of the regulations are coming out of the Consumer Financial Protection Bureau, the CFPB. That's an agency that was set up by Dodd-Frank. It's still a relatively new and young agency. They're still implementing several pieces of Dodd-Frank, and that's legislation that passed 12 or 15 years ago now, right? So there's still regulatory pieces of the Obama agenda that are getting put in place now. Some of that stuff was put on hold recently because there was a court case in the Fifth Circuit that questioned the funding structure that Congress set up around the CFPB. The Supreme Court ruled on that last week. And it was a rule in favor of the current structure last week. So there was sort of this big legal question mark hanging out over all of these new rules the CFPB had a role in crafting. Are these rules going to stand, or is the court going to sort of say, well, the way these rules were promulgated was illegal because the funding structure around them was illegal? And we got an answer on that last week, right? It was not an answer, personally I was hoping for, but sort of what that means now is I think there's a lot of this sort of litigation around different specific rules that is that's going to be now heard on the merits of those individual cases, right? So if it comes to the small business data collection rule that you and I've talked about before, when Congress said collect 13 points of data and the Bureau turned that into 90, 88 or 89 points of data, was that overreach on the Bureau's part? There's going to be litigation that gets fleshed out on that now. So there are going to be several court cases we're paying attention to, and that uncertainty sort of creates challenges for banks, right? We know we need to prepare for these rules if they're going to exist, but if the court strikes them down, then we don't want to spend a whole lot of money preparing for the rules if they don't actually go into effect, right? So banks are trying to sort of balance that uncertainty, and at the end of the day, we still got to take care of our customers first, right? So the communities in Mississippi are what our members are all about, right? How do we help individuals grow their wealth? How do we help cities and counties better serve their constituents? What's the role the banks play in sort of irrigating the economy? So my message to my members is we got all this stuff we're going to deal with. We're going to have to keep dealing with it, and we're going to be focused on it as an association, but individually at the bank level, you keep focusing on your customer, right, and keep helping your folks move forward. Regulatory change is something that our industry deals with a lot. We understand it. What we really worry about is when that trickles down and becomes an issue for our customers. That's really who we're advocating for when we talk about these things.
And along the lines of taking care of the customer, Gordon, how's the industry doing in this high interest rate environment? And also, we're seeing an uptick in credit held on credit cards by consumers, and thus we're seeing the delinquency rate also tick up as well. Well, how are the banks handling this?
Yeah, I mean, it's no doubt about it that consumers are feeling the effects of this inflationary environment we've been in. The rates have been higher, for longer than a lot of people hoped. I think they're going to probably hang out at their current rate for a little while longer. But there's I guess the good thing is when I talk to my members, when it comes to sort of the corporate credit environment, right? Are employers beginning to default on payments? We don't really see any credit cracks yet around the big corporate pieces, right? So, and we really don't see a lot of credit cracks on mortgage or personal consumer finance in Mississippi either. There are, there's data that sort of shows that credit card borrowing is up, right? And delinquencies nationwide are up there. So, but traditionally our banks have been very conservative in the way they allocate credit. And that has usually served our state well, particularly when we have sort of challenging economic times. So I'd like to believe that we're kind of on the back end of this interest rate environment. And, the last 4 years have been pretty challenging economically. I hope, the optimist me hopes that, the Fed talks all the time about a safe landing, or a soft landing, I should say. I kind of think of it as a safe landing, and I think John Hairston at Hancock Whitney maybe coined that term. But it feels like the plane is getting closer to the runway, and it's going to touch down, and then hopefully that means good things are to come. We'll see. We still got a little ways to go, I think, to get to the end of it.
It appears just from reading the tea leaves there. I think the report was issued yesterday from the Fed that inflation is stickier than they thought, not really retreating to the level they thought. They still seem to be holding firm on their 2% target. We got a long way to go to get to 2%, and you know as well as I do that last 1.5% may be the most difficult, right, to flush out. So I guess that leads me to this question. There were some dire predictions, Gordon, for the banking industry about a lot of the maturation of debt that the banks were holding as a receivable that was initiated at much lower rates, and they were concerned about refinancing that with their customers at much higher rates, and that may cause some default, honestly, on some of those loans. Is that playing out, or how are we doing there?
I've not heard of that coming up with concerns from any of our members yet. We do still talk about the challenges that the interest rate environment could cause to the bond investments that the banks are holding in their investment portfolio and unrealized losses. That's still something that we're monitoring and talking about, and that seems to be the most sort of front of mind impact still in Mississippi. But we haven't really had any real significant problems around that. It's just sort of, okay, we're managing what our interest rate risk is on our individual bank investment portfolios, right? And so, hopefully, like I said, our banks here have always been very conservative, and I don't mean that politically. I mean that economically.
Yeah.
Right? They don't make risky investments, and they're pretty good at making sure when they extend credit to somebody, that person or that company has the ability to repay, right? And so, so far, those sort of long-term focus on the blocking and tackling of banking, right? Making good, sound decisions. That's who we kind of as an industry have always been, and and honestly, it sort of insulates us from sort of some of this these national trends that are sometimes a little more complicated in other states where that's not necessarily the case.
Yeah, absolutely. Well, I always appreciate you coming on, Gordon. Appreciate the update. and look forward to talking to you some more. I'm pleased to hear that the industry in our state seems to be stable, in good shape, because there were some pretty serious predictions of big problems that the banks would face, but it sounds like we're in good shape here.
Yeah, we just the Mississippi Bankers Association just finished up our 135th year. So we've got a pretty good record for longevity in Mississippi banking. A year ago, those regional banks in California and in the Northeast were failing, and everybody got all kinds of concerned. And we just sort of said, everybody be calm, be cool. We're okay here. And we haven't really seen any deep downstream repercussions for all that here. It's a good
Appreciate
thing to know
you coming on.
Safe when you put it somewhere.
Talk to you soon. Thanks.
Thank you.